righty, everybody. Well, welcome back to the Real Estate Now podcast. So happy to see you guys. My name is Jason Reynolds, and today I have Dawn Zukowski, who is, I guess, now a past client. How are you doing, Dawn?
I'm well. Thank you, Jason. Thanks for having me on again.
Yeah, of course. So for those of you that have been listening or watching us, Dawn actually was on our podcast, gosh, maybe 3 weeks ago, somewhere around that time frame. And if you haven't listened, we were helping Dawn sell her investment property in Arlington, Texas. And since that time, we've actually sold the property. And what I wanted to do is give you guys a quick breakdown, and then we're just going to have a little conversation with Dawn about, her experience and potentially some lessons learned, things she might do differently or she would do again. But really looking at the details, Dawn, you did a great job buying this property.
Yeah, it's one of my home runs. And honestly, I can't say. I wish they were all like that. Unfortunately, fortunately, this was actually one of the better investments that I've had.
It looks great. So for those of you, listening and watching, this property was in Arlington, Texas. It is a unique property in a sense that it happened to be in Mansfield ISD. For those of you that aren't familiar with the area, Mansfield has higher ratings on their schools, and some of the areas happen to just fall in that school district, even though it's in proper Arlington, Texas. So a benefit to this property. It was purchased by Dawn in 2008, and you purchased it for around $117,000. You did have a loan on the property, and from my notes, it looks like you had an interest rate of around 4 to 5%.
Yeah, it was an adjustable, and I stayed with the adjustable for the life of the loan, and it really didn't go up that much. So it hovered around 4 to 5% over the life of the loan.
Okay, so pretty decent.
Yeah.
Okay, so the final sales price on this property that we ended with was $265,000. Remember, bought the property at $117,000. So that's great. Now, some things to factor in here though. Sometimes in contracts, obviously you have seller's concessions. In this particular one, there was $3,000 in seller's concessions that was negotiated. And then I wanted to go ahead and factor the rehab budget in here as well. Rough number was around $23,000. So when I pulled all those costs out, it brought that down to $239,000. From my notes, we were doing a rehab on that property, and it took about 30 days. From the moment we actually started work to it being completed was roughly 30 days. Once it was listed, from list date to being under contract was 10 days. We had 25 showings in those 10 days. So when I break this down, the 2020 sales price was $239,900 after all your expenses, and the difference from what you purchased was $122,900. So the appreciation was 105%, a little over 105%. So when I calculate that per year, you're about 8.75% appreciation per year, which is really interesting because when we look at ballpark numbers, that seems about right for when we do our calculations. It runs around 8 to 10% per year. So it was really neat seeing, that for you had decent appreciation over the period of the ownership since 2008. Okay, so then also on the lease, I wanted to look at that. So you sent us some information there. When you purchased the property, it was leased at $1,295. And then when you sold it, it was leased at $1,650. So we had a difference of $355. So it appreciated, let's see, about 27% over that period of your ownership. And then you had 4 tenants. So I factored it was about a tenant every 3 years, I would say. So you did have the roof replaced at some point, correct? So that was a larger expense. Did you ever replace the HVAC during your ownership? It looked fairly new.
Yeah, the outside was replaced, the outside unit. So yes, that was replaced also.
Any other major maintenance expenses that you can remember?
The only other major thing that stands out, there was an issue with one of the bathrooms had a leak where they had to go in and actually jackhammer out the cement basin. I guess it was a defect in the installation. So I ended up kind of eating that cost. And that was like $4,000 or $5,000 for that. So
gotcha. Okay. But so even in a sense, if you look at the, you know, the profit on the property of 122,000, and you subtract it, if you're just playing it safe, another 15,000 out for maintenance expenses, still a very healthy scenario. So this, you know, hopefully you guys listening, this gives you an idea of our market in the area from 2008 to now, but also, gosh, just the market itself in terms of being on the market 10 days and having 25 showings and then being under contract over list price. So knowing all that information, and now, Dawn, that we're past the closing, you've got the money in your bank, you know, what would you say were some takeaways from this process in selling?
Yeah, I mean, one of the main takeaways that you and I had a conversation about early on is pre-rehab or pre-renovation. We had the conversation of whether to try to sell as is, where the house was a little dated, a little run down, just to tenant wear and tear. This one had a little bit more wear and tear than normal, but
Yeah.
versus the, you know, putting the money in up front to have basically a make-ready house to put on the market. And so I would not hesitate to do that again. In other words, it should just be anybody who's looking to put a house on the market today. I would recommend definitely having a make-ready moving condition to have it move quickly and to get the highest price possible.
Yeah, yeah. And then in terms of the process itself, you know, I know we ran into some hiccups, I think, trying to lock in all the estimates and items like that. So, you know, from our end, on our side, we've tried to tighten that schedule a little bit, but the contractor we happen to work with did everything. It's all the major items, essentially, most of the make-ready flooring and the granite as well. You also benefited pretty well. Arlington just put it was a recreation facility was built just, I mean, a rock's throw away. So that was a huge benefit as well. So I'd like to actually pick your brain. I think that this pretty much ties up the experience on this property. And you said this one was a home run, but it is good to have both perspectives. So how would you say your average deals have worked out in terms of this one was a home run, but how do you prepare for those ones that don't work out so great?
Right. So, I mean, they always say in investing, have an exit plan in place or a couple of options available, how you're going to get out of an investment. I'm from Connecticut, if some of the viewers may not know, I said that in the last podcast. And in Connecticut, or New England in general, we've not had the appreciation that you guys have had down in Texas. So a lot of my investments up here that I bought around the same time in the mid 2000s, late 2008, 2010, I still have. Just the fact that when the market crashed 11 years ago, the downturn, we just never recovered. The market has not come back like it has in other areas of the country. So my plan B or plan C is to hold these properties a little bit longer, let the tenants pay down the mortgages to help build some more appreciation into the property. Selling them now would create more of a loss, although I have done that on some of my properties just to kind of,
Okay.
you know, they're break even. It just wasn't worth holding the risk. And so each one's handled, I guess, a little differently, depending on the location and what's happened with the market over the last decade.
Would you say that's always been a strategy of yours in terms of trying to diversify the location of your assets to capitalize on, you know, certain areas may have a higher upswing than others, or did this opportunity in Texas happen to work out by chance?
Yeah, no, great question. Early on, there's a couple of schools of thought where some investors feel that they want to invest in an area that you could actually drive to and see your investment. You know, the brick and mortars right there. I was involved in an investment club, one of the REIAs up here in Connecticut, and one of the school of thoughts was, well, not only invest in your own area, but try to find markets around the country that are on the upswing. And back at the time, Dallas, Fort Worth, Arlington area was one of the target markets that I was researching as a possible upswing based on new employment, school systems, anything that would bring appreciation to the area. So there's risk inherent in any investment, but I felt that I had enough information to reach out to an area that I've never been, and took a chance on Arlington, and in this case it did pay off.
Do I remember correctly from our last podcast that you never set foot in this property and you bought it sight unseen?
That's true. And you got to remember 2008, we didn't have the technology that we have today. So, I mean, I think we had Google back then, but that was about it. So yeah, absolutely. Some of my friends were kind of like, do you know the house is actually
You're crazy.
there? Yes. So that is correct. I've never actually stepped foot on this property.
I think that's incredible. I mean, it's just a further testament to the fact that you bought this property sight unseen in 2008 for $117,000. And I think, in a sense, you rolled the dice. I mean, every investment is a risk, but my gosh, through the research and determining the area you wanted to invest in, it's so incredibly clear that you picked a great property. I mean, it just worked.
It did. You know, and then you asked about hindsight. You know, I think I had joked with you that I wish I had bought 5 more back in the time. But I think at the time I thought, well, I'm just going to do one because one's enough risk. But of course, hindsight's 20/20. So yeah.
Always.
Yeah.
Well, again, thank you, Dawn. For those of you that are listening, I'll post this information so you can see it. And Dawn is so gracious for us to be able to actually walk through this and provide a live example so you guys can get an idea of what's actually happening, what we're doing, and get a real picture, which I think is valuable for folks out there nowadays. So again, we'll post that information online. Dawn, appreciate you so much. And maybe we'll talk to you on a future podcast when you buy something else.
That would be great. You never know.
Okay. All right. Thanks, Dawn.
Thank you.